Welcome to Beyond Investments with your host, Seth Leishman of Ostro Financial Consultants. Information provided is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but its accuracy and completeness are not guaranteed. Neither LPL Financial nor the hosts of this show or accept any liability for the use of the information discussed. Consult with a qualified financial, legal, or tax professional prior to taking any action. Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Ostro Financial Consultants, a registered investment advisor and separate entity from LPL Financial. Today's guest, Rick Fisher, is a financial advisor with Ostro Financial Consultants, National Planning member SIPC. And now, Beyond Investments, here's your host, Seth Leishman.
Good morning, and welcome to Beyond Investments right here on News Talk KNCO, AM 830 in beautiful Nevada County. Not 100 degrees, unlike last week, which is nice.
Yes.
Slight cool down. We were at the car show.
Yes.
Downtown Grass Valley.
That was over a weekend ago. That was over a week ago.
It was.
Yeah.
That was hot.
That was hot. Yes. Good. We had shade, but it was hot.
It did. Rick Fisher and Seth Leishman here, by the way, from Ostro Financial.
Morning, everyone.
We are excited to be here. And we're going to have some, we're going to go over some stock market stuff today.
Kind of just go back and kind of talk some numbers, how we've done, where we started at the all-time highs late in 22, what's happened since, just put everything in perspective.
Yeah, it'll be very interesting in my opinion. We'll see where it's been, and perspective is key.
Yes.
I think in many things in life.
Plus you're hearing a lot of different, again, we've mentioned this many times, you and I do have our business news on. We're listening to it, listening to different pundits being interviewed. And these are very respectable people. I mean, they're analysts and CEOs.
Experienced and all of that.
And everyone has a different opinion.
Yeah.
There are some say this is still it's a bull market rally in a bear market. Some say that this is the new bull market. We've been in it a while. Mm-hmm. And, it's kind of hard when everyone is saying different things. So we'll kind of just talk about our feelings on that. But first, I think we should do some trivia.
Let's do some trivia first to start.
So we will start with some financial trivia because this is a financial show.
It is.
And actually, this is at July 25th. So
very good.
A couple of days. 1893. And I think that I remember talking about this last year.
I wouldn't be surprised. I would say we're starting to
The terrible panic of 1893 reaches its low point. With almost 1/4 of the nation's railroads heading into bankruptcy, the directors of the New York Stock Exchange nearly closed down the exchange. Okay, so how would that be? That'd be like for the top chip manufacturers, or 25% of the chip manufacturers going out of business.
Oof.
Yeah, I remember back in...
That'd be enough to shut down the market for sure, right?
Absolutely. It's funny you should say this because I remember... I think it was 99, 2000, 2001. It was towards the market peak.
Yeah.
I went to a conference down in San Francisco, and it was put on by Morningstar.
Oh, yeah.
And they had Louis Ruchhauser and all these huge names.
That's right.
And they had, it was a 2-day thing. And the first day they had, I don't remember his name, but he was one of these kind of visionaries. And he was talking about how we were in a new paradigm, that technology was the new paradigm, like the railroads, like the transistor radio and the automobile.
Yes.
And again, I was a young broker at the time and young planner. And so I went home and kind of upgraded my portfolio. Of course, yes. If I'd thought about it, says, well, yeah, and all of those had their big fallout before they kind of leveled off. So
that's right. Yes.
Yeah. So, I mean, those kind of things, you can't get too excited. That's why diversification is so important.
Correct.
But back in 1893, they didn't have the Federal Reserve. They didn't have, there's no income tax. And one of the arguments for the Federal Reserve was to hopefully prevent that.
Has it really done it? I'm not so sure.
Maybe to a lesser degree. Anyways, moving on to something more fun, sports.
Yes.
1939, New York Yankees starting pitcher Atlee Donald sets an American League rookie record for consecutive wins, beating the St. Louis Browns 5-1 for his 12th straight victory. Wow. Can you imagine being a rookie come out and win your first 12 games. Now, I've never heard of Atlee Donald, so I'm sure he didn't have much of a career.
He must have slowed down.
So I've never heard of him at all.
Yes.
So
yes.
Probably didn't last very long. The next year, American John Sigmund began swimming for 89 hours, 46 minutes from St. Louis to Cartersville, Missouri, in the Mississippi River, 292 miles.
Ooh.
Longest solo swim of all time.
Wow.
Yeah.
Was he going downriver or upriver?
It doesn't say. Well, he's going, don't know. I'm assuming south. I don't know Cartersville, Missouri is south of St. Louis or not.
I'm not sure.
I don't live in the Midwest, so.
Correct. Me neither.
So maybe someone could call us.
Look that up and let us know.
Moving on, 1941, 41-year-old Lefty Grove wins his 300th win and final Major League Baseball career game.
Oh.
He's in the Hall of Fame. A lot of people who understand baseball know who Lefty Grove is. That's why I have him in there. Yep. 1956, Pittsburgh Pirates, Roberto Clemente hits Major League Baseball's first and only walk-off inside the park grand slam for a 9-8 victory over the visiting Chicago Cubs at Forbes Field.
Okay.
Read that again. Walk-off inside the park grand slam. I mean, it doesn't get any better than that.
Yeah, not so much. That's pretty impressive.
And I don't think that'll ever be done again.
No, I'm going to go with no.
Okay. Moving on to music, 1980. AC/DC released their 6th internationally released studio album, Back in Black, the first AC/DC album recorded without former lead singer Bon Scott, may he rest in peace, who died on February 19th, 1980 at the age of 33. The album has sold an estimated 49 million copies worldwide to date, making it the second highest selling album of all time and the best selling hard rock / heavy metal album.
Wow.
Great album.
Wow.
Moving on, 1970, going back a little further, the Carpenters stand a 4-week run at number 1 on the U.S. singles charts with They Long to Be Close to You, the first of 3 number 1 hits and 17 other top 40 hits. The song,
wow.
Yep, Carpenters. Karen Carpenter's special voice, very special voice.
Oh, yeah.
One of my favorites. 1969, the Seattle Pop Festival took place at Gold Creek Park in Woodinville, Washington. Acts who appeared over the next 3 days are Chuck Berry, The Byrds, Bo Diddley, The Doors, The Guess Who, Led Zeppelin, Santana, 10 Years After, Ike and Tina Turner, Alice Cooper, and the Youngbloods. And there was a few others that people wouldn't heard. Also in that same year, Neil Young appeared with Crosby, Stills, and Nash for the first time when they played together at the Fillmore East in New York. Young was initially asked to help out with the live material only, but ended up joining the group and was on and off for the next 30 years.
Right, yes.
1964, the Beatles' third album, A Hard Day's Night, started a 21-week run at the top of the charts in the UK charts. It was the first Beatles album to be recorded entirely on 4-track tape, allowing for good stereo mixes. I have my sisters who are 10 years older than I, they were into the Beatles when the Beatles were hot. They were young teenage girls.
Yeah.
And they gave me their copy of the Beatles' first album. It was in mono. It wasn't.
Oh, really?
Yeah, I kept it. I still have it, but it was pretty bad shape when I got it, so I don't think it's worth anything.
Right. Yes, for sure.
Going back a little bit farther, 1960, Roy Orbison reaches number 2 with the U.S. singles chart with Only the Lonely, his first hit. The song was turned down by the Everly Brothers and Elvis Presley, so Orbison decided to record the song himself.
Oh.
And the rest is history. Moving on to history, U.S. forces under General Nelson A. Miles invaded Puerto Rico during the Spanish-American War.
Very nice.
And on this date in 1868, the U.S. Congress formed the Wyoming Territory.
Ah, very good. Wyoming.
Yep. So that is it for trivia.
For trivia today.
Yep.
So when we think about a little bit of history, we're going to talk context, perspective, history, when we think about the markets, and risk.
Yes.
And, capitalism, stock, equity, those kinds of things. When we come back right from this commercial break, you're listening to Beyond Investments right here on News Talk, AM 830.
Today's guest, Rick Fisher, is a financial advisor with Ostro Financial Consultants, National Planning Member SIPC.
Welcome back to Beyond Investments here on News Talk KNCO, AM 830.
So during the break, we started talking a little bit about the things that we do as fathers.
Yes, I got a text from my son asking if he could have a lemonade out of the fridge. And
which I think is just amazing that you trained your son to call you to get permission.
Absolutely.
He's home alone. It's like,
yeah.
So he called to ask permission. Dad, can I have a lemonade?
Am I allowed to have a lemonade out of the fridge? And I said, yes, of course. Absolutely. You can have one. Just go get, make sure to get a not cold one. So get one from the pantry and put that one into the fridge so a new one can get cold again.
And that is a great idea. And then my comment to you was, yeah, but usually what happens is that you give them permission and then you come home and you see it on the counter half drinking and have to pour it out because I don't know if it's been backwashed. I don't know if a fly has flown in it or
correct.
It's been there for 2 days and it's got dust in it.
That's right.
You're the brave man. You just drink it, huh?
I just drink it because most of the time I know whether within a timeline of how long it's been there. Nothing sits on the counter for more than a few hours.
Okay.
Right? I mean, no way. So I kind of know. And the kids are old enough that backwash is a lot more rare, when Weston's 10. And then, it's like, I'm not so worried about it.
See, I was raised an only child, so that kind of thing, I'm just really sensitive to that kind of stuff.
Right. Yes. I've never been a germaphobe or, someone drank out of my drink. Now I can't touch it, that kind of thing. But I know plenty of people are.
Yeah.
And respect to them. Absolutely. But yeah, it's pretty fun.
Anyways, I love those little kind of kid moments.
I bet you he won't finish that by the time I get home later this afternoon.
He's saving it for you. You should tell him put it back in the fridge. So at least it's cold when I get home.
At least it's cold when I get home.
Nothing more warm soda when it's 90 degrees outside.
Exactly.
Anyways,
let's talk about the market.
Okay.
There's been a lot of headlines recently. The market's been on a great tear.
It has.
I mean, 11, 12 days straight?
So for the Dow, it's 12 straight up day.
12 straight up days for the Dow. Obviously, other indices have got their own things and they're going up and down and whatever they're doing. But the Dow being a blue chip dividend stock focused, it doesn't have a ton of, what we would call it.
It's 30 stocks.
It's 30 stocks. It's not really an indicator.
Concentrated in one industry, industrial.
Yeah. So we got to remember that when we ever anytime we talk about the Dow, right? And we remind people it's an index, it's a basket of stocks. And in this case, the Dow is a very somewhat concentrated basket of stocks. Mm-hmm. But let's still talk about it. What's going on?
Yeah. So I want to kind of back up and where did all this start? So when we had the market's highs, the intraday highs back in late
2021.
Yes.
Right? Probably November, December, January of 2022?
January 2022. Yeah.
Perfect. Okay.
So for the Dow, the intraday high was 33,963 on January 5th, 2022.
Perfect. Okay.
For the S&P, again, 500 stocks, more broadly diversified, 4819 on the 3rd of January 2022.
Okay.
And the NASDAQ, primarily technology stocks, was at 16,212. That was back in November of 22. November of 22.
November of 22?
21, excuse me.
21. Okay,
21, excuse
Very
me.
good.
We bottomed out. So that was the high watermark.
Yes.
And then we bottomed out over the next 10 months. So the low was around October 10th, excuse me. October 10th, we went from, so we had the market high was 33,963 down to 29,203. So from high to low, 21%.
Right.
And that's called a bear market.
We would call that a bear market, yes.
Okay, so that, and again, for the S&P 500, it was a little bit worse. 2 days later, October 12th, 35.77 was the low. That was a 26% decline.
Oh,
so
wow.
At a solid bear market. And then technology, again, gets up the highest. It got hit the worst. So it bottomed out on 10/14 at 10,321, 36% off the high.
Yes, 16 down to 10.
We've come a long way since then.
Yes.
So if we were off back then, so let's say right now we've got the Dow and the S&P are just 4 to 5% off the all-time high.
Okay.
So we've had a nice little rally year to date. So at the beginning of this year, we had the Dow at 32,791. It was 11% from the high.
Right.
S&P 500 was still in a bear market. It was off 21. NASDAQ was also at 36, so it hadn't gotten much better. But since then, we've had a very nice run. And So year to date, the markets are up.
Yeah.
And the NASDAQ is kind of leading the way with everyone's talking about that. It's they're not believers in the rally because it's concentrated in just a few stocks.
It really is.
And those are starting to cool off. Others are starting to participate. We're starting to see some participation, but there are those out there that are the feeling that we're going to have to test those October lows.
Oof, that's a brutal drop.
That is a very brutal drop. Others say that we are in a bull market. We've been in a bull market for a few months.
Yeah. Okay.
And this recession, the most anticipated recession of all time, keeps on getting pushed back. It was supposed to be this year. Now they're pushing it back next year. And people say, you know what? It's going to be a nothing burger. If we have a recession, it's going to be a nothing burger. Yeah. Only time is going to tell. Yeah. And again, the investing principles that we pound on the table: be diversified, be patient. Yeah. It's time in the market, not timing the market. It's just hard when you're in the middle of it. Oh,
you can't. Hindsight's always 20/20.
Right.
You can always look back and go, "Oh man, I shoulda, woulda, coulda." But when you're in the middle of it, there's emotion and fear and greed and all those other things that cause us to not use rational thought and brain and patience.
But there was a couple of big technology stocks, Facebook and Google, that got hit hard. They were probably down 50%, and they've had huge rallies.
Yes.
And so the question is, are they going to keep going, or if you haven't bought those stocks or are participating in those indexes, is it too late? At the end of the day, it really depends on your time frame.
Yes, it does.
If you're in retirement and your cash flow is okay now, and you're comfortable with the risk level, it's working, maybe not.
Maybe you don't. Yeah, maybe you don't make major changes.
Right.
Absolutely.
But if you've got some time and you want to take part of the portion to say, you know what, I think this might be going. It's talking to your financial advisor, if you have one, is always
very
run
prudent.
Your ideas off the professional.
Off the professional, absolutely. So when we look backwards at the last handful of years, let's look at some timelines. Let's look at some perspective of what a little bit more time than, say, a month, 6 months, a year. Let's go a little longer.
Okay,
what do we have?
Okay, so let's say you're out there and you're 5 years away from retirement.
Yes.
Okay, so 5 years ago, the Dow was at 25,527. So over the last 5 years,
you saw on the Dow, 5 years goes from 25 up to 33, back down to 29.
Right.
And we're back up to
almost 30. We're at
33 and change or whatever, 32 and change.
We're at actually 35,438.
Sorry, 35. Okay, so it went from 25 to 35.
Right.
Back down to 29. And then back up to where we are today. Wow. Right. Okay.
So, and if you had stayed,
you just stayed the course, you were fine.
Yeah, you're up about 40% in total.
Right.
So about
cumulative.
Yeah. So
that's an average of like 7% a year, a little over 7% a year.
Exactly. So 5 years out from retirement, you probably still want to, you have time to make up some. If you have some losses, you have time to get those back even, hopefully.
But a lot of it takes, there's a lot of volatility during those 5 years.
Exactly. Yes.
And we are speaking unemotionally.
Yes.
And we are speaking as if you plop it down and you look at it one time 5 years ago, you go to sleep and you wake up 5 years later.
Exactly.
And there it is. And you were able to emotionally ignore all of the ups and downs, that roller coaster. And, there's been a lot of studies around what the market has done and what the actual investor return has been.
Exactly.
And we chalk that difference, which, without giving away the farm here, the average investor return is substantially lower than the index.
Yes.
The most of that is chalked up to emotion and the fact that investors often, they shoot themselves in the foot because they bail at the worst times and they get in at the worst times.
And sometimes what I like to when I talk to clients, when we're talking individual stocks, I'll give them a big name: Amazon, Google, Microsoft, PG, Procter and Gamble. Companies have been around. Say, okay, they had all-time highs at one time.
Yes.
Okay, and let's say do you think that's going to be their highest all-time of all time?
Right.
Or do you think they're going to have another one? It's if you still believe in those. Now, sometimes it doesn't work out. General Electric was a stalwart and then ran into some really bad years and probably won't.
We'll probably never see that number ever again. Yes.
But we're in a different age.
Yes.
And if you think Google is going to be around in 5 years, Microsoft, and the economy gets better, so people start spending, are we going to stop buying computers and searching the internet? And the answer is probably not.
Probably not.
So, I'm not saying to buy any single stock. It's just giving you an example of if you have faith in the market over time, it's earnings that drive prices. Right. And if you think these companies are going to make more money in the future than they do now, their stock should go up.
Yes.
But it's going to be a rocky ride.
But there's no guarantee of anything in the future, of course.
And that's why you need diversification. You need to have some money in cash. You need to have some money in bonds.
Yeah.
Real estate. And, all the different, spread it out. You
got to spread it out. You're not exposed to any one major risk of one thing.
And again, sometimes, 08, 09, almost everything got hit.
Oh, absolutely.
But I think within, 4 or 5 years, we were probably back to...
by year 4, right?
If you didn't
not mess with it. Yeah, exactly. If you didn't bail, the index itself was back within 4 years. And actually probably less than that, 3. Right. Realistically, like 3 years. So there's rarely been a time where it takes, 5, 8, 10 years to get back.
That was like the Great Depression.
It's like the Great Depression.
And a lot of people think the Great Recession was going to be the Great Depression.
Oh, and it wasn't even close. In terms of recovery.
Right, exactly.
In terms of recovery.
And then we kind of have almost wasn't the flash crash, but 2020, COVID.
Yes.
That was that V shape that I think most people missed.
Oh, yep, absolutely. I mean, you almost couldn't react fast enough.
Yes.
You couldn't bail. And then it's like, oh my goodness, it was right back to where it was.
And I think you and I would say we're more on the cautious side that, yes, we want to have money in equities, and a lot of these equities have not been participating recently because of, it's been technology.
That's right.
Dividend paying stocks, you get paid to wait. Yeah. It's just something to think about.
It is. It really is. You look at markets and you look at indices, and especially you look, some of the big ones. I mean, the NASDAQ, S&P 500, I would encourage investors to dig in deeply. What are you actually investing in if you were to say invest through an index fund,
right?
That mirrors the index, right? Because the whole disclosure thing around indexes, you can't actually invest in an index directly. You would have to use a fund that essentially attempts to mirror it. But that S&P 500, fund, you're pretty heavily concentrated in the top 10 holdings. It's not an even weighting amongst all 500.
But there is an index out there that does equal weighting.
There is an equal weighting.
And I know in the news earlier, they were talking about on the business channels that the NASDAQ is going to the ETF, whichever is going to rebalance, and a lot of those top names are going to get pared down,
right?
And how is that going to affect their stock prices?
Correct,
because they're a big holder, and if they decide to trim, a third of their portfolio, how is that going to affect the stock?
Yeah, oh yeah.
But you should harvest your gains at some point.
You really should. You really should at some point. I mean, so perspective and timeline. At the end of the day, it's time in the market, not timing the market. And with a reasonable time frame along with asset allocation, diversification can, but not always does, help reduce risk.
Absolutely.
And it also puts some perspective on the day-to-day fear and greed and ups and downs of equity in particular. That does move around. We were kind of focusing on equity because it does move around more than bonds and things like that. So very interesting discussion, Rick, to be thinking more, what's your timeline and what level of risk is there when you've got a short timeline versus a longer timeline? And even if you're about to retire, I mean, you could retire today. How long are you going to be alive after retirement?
Exactly. Right? Probably 20 years.
Let's hope at least 20 years.
You should have, it should be a specific amount allocated to equities because that's going to be your 20-year money.
Yes, so exactly.
If you even a
70-year-old has some portion of their money which would be called medium term.
Sure, absolutely.
Because you got to plan to live longer.
And with inflation being more elevated than it has been in the last few years,
that's right.
That's not going to go away. It may moderate,
right?
But again, things have still gotten more expensive. They're not necessarily going to get cheaper.
No, they'll just slow down how much more expensive they are next year, hopefully.
Exactly.
The current prices are here to stay. There's not going to be a lot of deflation. We're just hoping deflation would be wonderful. Sure, in some respects.
Yes.
Right? To see actual prices go down. But at this point, I'm just hoping it doesn't go up 10% again next year, right? We're just hoping for less inflation, per se. So,
and I heard that, speaking of inflation, people say, well, technology we get just better technology for the same price. Actually, Apple's thinking of increasing the price of their iPhone Pro.
I would not be surprised. Yep, absolutely. I mean, it's been a few years. I'll give them that. They haven't changed the price in at least 3 years as they come out with new ones. But still, any excuse, I
know if you want to buy, I know there's a lot of cars out there not moving on the lot, especially electric cars, so you can make a deal on those maybe.
As a side note, I bought brake pads for my Jeep.
Already?
14, not for the new Jeep. This is the old Jeep. 14 months ago.
Okay.
Just got on the website to order. I only bought front brake pads.
Okay.
Because those were the only things I needed. Got on the website today to order rear brake pads. It's the same company, same everything. $69 14 months ago, $115 today.
Wow.
Yeah. Nearly double. Plus a doubling of the shipping cost, because I found my old email with the other order, and I looked at this one, and I went, oh my goodness. Wow. So anyways, inflation. Ouch. It hurts.
Yeah, it does.
As always, we encourage any listener, if you've enjoyed the show, you can download or stream it from our website at austrofinancial.com. And as always, you can give us a call at 273-4425 and come experience the difference when you think beyond investments.
Bye, folks.
Information provided is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but its accuracy and completeness are not guaranteed. Neither LPL Financial nor the hosts of this show or accept any liability for the use of the information discussed. Consult with a qualified financial, legal, or tax professional prior to taking any action. Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Austro Financial Consultants, a registered investment advisor and separate entity from LPL Financial.